Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the show with us today is a new guest to the program. His name is Martin Vydra. He's an engineer with a background in nickel and cobalt. Cobalt obviously was a very hot topic last year, and it continues to be this year. We've done several programs revolving around a market that up until last year, very few people had heard about. And today we're going to have an in-depth conversation about how the cobalt market works, really get into some details that most people are not able to shed some light on. And to that point, Martin, it's a pleasure to get you on the program with us today.
Thanks, Colin. It's a pleasure to be here.
Yeah, for sure. So we actually got introduced by Anthony Milowski over at Cobalt 27, and we've had Anthony on the program several times. I understand that you're now working with Anthony and Cobalt 27, and we'll wrap the conversation up towards the end discussing that. Maybe just a quick introduction on yourself, if you can provide kind of how you got into the cobalt and nickel space.
Oh, okay. Thanks, Colin. Yeah. So as you said, I'm an engineer by training, and out of school, I was fortunate enough to join a company by the name of Sherritt International, which is globally recognized for nickel and cobalt extraction and recovery and just the development of hydrometallurgical technology. So I spent 30 years with them covering pretty much the entire globe and being exposed to almost, I would say, a significant portion of the nickel and cobalt operations in the world, whether it be South America, South Africa, Australia, Asia, and North America. Had the pleasure of running their nickel and cobalt operations for a few years and also running their technologies and commercial operations, where we were tasked with marketing hydrometallurgical technologies globally for the extraction and recovery and refining of whether it be nickel, cobalt, but also gold, copper, zinc, uranium, and also setting up the marketing organization and marketing Sherritt's commodity cobalt and commodity nickel, which gave me great exposure to end uses of these materials, specifically superalloy manufacturers and jet engine manufacturers, battery producers, and other consumers of this, whether it be stainless steel for nickel or, say, magnets, pigments, and paint dryers for cobalt. So had a very broad perspective how the product comes out of the ground, how it's turned into a usable product that can be sold into the market. Spent a lot of time marketing the product and working with consumers and understanding how they like to contract it, how they like to consume it. It has given me a great perspective and a broad experience on this industry, which I find absolutely fascinating.
Well, I'm gonna jump in with a loaded question if there ever was one. Cobalt obviously is a very opaque market, and without being very close to it, it's hard to understand exactly what drives the price. And if you can attempt from a very high level just to explain how the cobalt market works and what the factors are driving the price, that would be fantastic.
No, absolutely, Colin. Thanks, and that's a great question. As you say, cobalt is an opaque market. It's been referred to as a boutique metal, and one of the things is that cobalt is a byproduct of primarily copper or nickel production. So it's a non-discretionary production from the producers of nickel and copper that comes out regardless of what the market is. So it's not typically shall we say, controlled by supply demand. Your cobalt supply will continue to be a resultant of copper and nickel production. What that results in is when you're marketing cobalt, you can be in situations where you're in a significant oversupply, and we saw this about 4 or 5 years ago where cobalt was hitting low lows, to a situation where cobalt is deemed to be in extreme demand and there's not enough production to meet the demand, and you're going to get price spikes as we've seen in the last 24 months. And what also adds to the mystique of the cobalt market is I think there is no transparent way that, say, a retail investor or somebody outside can figure out what the cobalt price is. It's not reported on the news. It's not traded on a stock exchange. There is a contract for cobalt on the London Metals Exchange, which was introduced in 2010, but it's not very liquid because cobalt comes in various forms, shapes, and sizes. How the cobalt market works is the producers they will reach out to their consumers usually on an annual basis, which is usually the fourth quarter of any year. We call it the mating season sometimes. So you'll get consumers and producers together in an area, whether it be Asia or sometimes at London Metals Exchange Week in London, and they'll negotiate annual contracts. And typically these contracts will be negotiated by the producers and consumers to meet with their demand. And the producers will always hold back some of their production because knowing that cobalt is a byproduct, they're not 100% sure if they'll be able to meet 100% of the demand out there, but they hold it back. These prices are negotiated on typical terms, and those terms are based on a price discovery price that is reported by a publication by the name of Metal Bulletin. And Metal Bulletin is a metals magazine that solicits information from the market, from consumers and producers, and tries to determine what the fair market value of a certain commodity is based on transactions that take place during that week or during that month. And they do this for a lot of materials, and cobalt is one of them. And the Metal Bulletin also does a very good job of, they discern between different levels of cobalt, because cobalt is not all the same. You have a high-grade cobalt, which is 99.9% purity, and you have a low-grade cobalt, which is about 99.6% or lower purity. And these prices are reported, and consumers and producers will use those prices as a formula basis typically to settle their contract. However, what happens is sometimes you will get consumers or producers that find themselves in a situation where they have excess inventory, excess material, and they need to sell it into the market. And at that point in time, they may sell that material on a spot basis to a known customer or to a known trader. These prices sometimes typically are reported to your publications like the Metal Bulletin. And if there's a trend, which typically in the summer months is a trend down because the market is slow, the Metal Bulletin will report a decline in price if that's in fact what happens. And that is in fact what we've been seeing since April. Is we've seen market material coming in the market as production has ramped up, but consumption has not been able to maintain with it. So as material is set into the market, the consumers are asking for a little bit better pricing. They typically can negotiate better pricing when they're not in a need to buy it. This pricing gets reported to the Metal Bulletin, and they will report down a price. The unfortunate thing is the price of cobalt then is considered a reflection of only perhaps a small trade of cobalt. You might have a 5-ton trade one week, which is on a down price. And when you're thinking about a 100,000 ton per year market, 5 tons affecting the price is not really reflective of the true market, but it can cause a price swing. What happens is people will look at that and they'll say, well, cobalt is on the downswing, but they don't realize that most of the cobalt that producers make has already been sold, and it has been sold probably at prices negotiated much better than what's being reflected in the spot market. So it creates confusion for investors, it creates confusion for banks, it creates confusion for analysts, and one of the biggest things we always talk about as cobalt producers and myself at Cobalt 27 is trying to educate the general population that cobalt pricing is definitely not, you shouldn't look at cobalt pricing in the summer months or on small trades, because it's not reflective of the true value, and it's not reflective of where the market is going.
Well, I think public market investors, those who are investing in resource companies, say from the Toronto Venture Exchange, they're very focused on metals like lithium, cobalt, vanadium on one narrative, which is the battery metals narrative. And that is a big driver in the terms of the potential growth of demand. But in terms of existing demand for many of these metals, it doesn't have that much of an implication yet. So from your perspective, are you focused on something like the battery revolution coming, or is there drivers that are already in place aside from that potential new demand for cobalt?
Oh, there's drivers already in place. We are obviously with all of the talk about electric vehicles and the potential that will do to create a new cobalt demand. We're looking at that, but there's existing drivers in place that I think people forget about. Super alloys, until recently, were the biggest consumer of cobalt. I believe they were the single biggest consumer at about 24%. And super alloys will continue to be a significant consumer of cobalt as airlines are rotating their fleets or renewing their fleets. As you see that Boeing and Airbus always announce these huge contracts after something like the Paris Air Show or the Farnborough Air Show, where they say, well, we've got 800 new planes that we've ordered. People forget that those planes contain a significant amount of cobalt, especially in the jet engines, and we focus on that. The electric vehicle revolution is driving more than batteries for cobalt consumption. I think people do not recognize that cobalt goes into electronics. There's been some recent articles about microchips switching from cobalt circuitry to from copper circuitry to cobalt circuitry because it's more reliant. And magnets, some of the strongest magnets in the world are cobalt samarium. And people, I think, tend to overlook that electric motors need magnets. And Tesla, with their Roadster and their high-performance electric cars, they had the ludicrous mode. One of the reasons they were able to have such significant performance was not only the performance of the battery, was the magnets. The magnets could deliver tremendous torque and power to the wheel to get that acceleration. And you know, we may not have as much cobalt in batteries in the future, but we're going to need more cobalt in magnets. You're going to need more cobalt in electronics. You're going to need more cobalt in potentially sensors for autonomous driving. The list is endless. So there is significant existing drivers for cobalt demand, which we're very bullish on. And there's also the potential growth from EV batteries and other, call it, benefactors from the EV revolution, whether it be magnets or sensors or electronics. So those are the things that we're looking at.
Now, in terms of you working with Cobalt 27 and applying your expertise to what Anthony and his team over at Cobalt 27 are working on, I know from discussing before the call that you're working on identifying potential projects that could fit somehow within the portfolio. But what is it that you're looking for, and what is it that you're working with Anthony to bring to the company?
Okay, well, thanks. So my role is head of strategy, and Anthony has asked me to work with him and Justin Cochran, the president and COO, in helping identify opportunity and undervalued assets. My particular expertise is being able to look at the existing assets or potential projects and be able to look at it from a perspective that might not be obvious to a typical investor, investment banker, or financial analyst. You can look at projects from a financing point of view, potential cash flow, what is the possibility. Where I try to bring a different perspective is to look at the technology that's being applied to recover the metal, look at the recoveries, look at the actual resource itself. A lot of companies will say we have X million tons of Y material in the ground. Where I come in, I can say yes, but you'll only be able to really recover a portion of that because of the mineralogy. So really my focus is to give a technical perspective on the assets that we're looking at, to find assets that are potentially undervalued and there's an opportunity to invest with an existing owner, or to also make sure that any assets or opportunities that come across our table are not being overvalued and that we're not extending a risk to our investors. So what we're really trying to do is make sure that our shareholder base and our investors get the maximum return for their investment. And one of the things you can do to that is make sure that the investments that we're focused on are top tier class 1 assets. And I think the two recent streams that Cobalt 27 announced with the Ramu and Voisey's Bay demonstrate that, because those are two world-class assets that I think any commodity producer would just love to get their hands on.
Excellent. Well, final question for you, and circling back to the discussion that you gave about the seasonality of the cobalt market. Obviously, cobalt prices have come off a little bit from their highs, and this is a question that's not easily answerable, but do you expect, from your knowledge of the space, that cobalt will continue to appreciate in price over the coming months and years based on the demand picture?
Yeah, I wish I had that crystal ball. My own sense, and I'm bullish on cobalt. Let's put it that way. I believe that the recent downswing on cobalt is just a seasonal factor, and that it will correct. I like to think of it as that my guess on the thermodynamics, I think I'm going to be correct at some point. The timing might not be exactly on. I believe that the demand for cobalt will continue to be steady and strong. and that you will see an appreciation in the price. Where that price actually ends up, I'm not sure, but I do believe that cobalt price has lots of room to improve. And I think that if you look at the cost of cobalt-containing applications, whether they be battery jet engines, they're proving to be elevated cobalt prices as they're finding other efficiencies. So I think the will be able to absorb higher levels of cobalt price. And I think, though, you'll need higher levels of cobalt price to incentivize producers to bring more cobalt on stream. If the incentive price is not there, then the producers are not going to make it. So there's going to be a fine balance. But to answer your question, I'm bullish on cobalt, and I believe we're going to see an increase on it. And I believe you could see in the midterm, 3 to 5 years, a much more significant increase as especially if the EV picture takes off as per predictions.
Excellent. Well, Martin, I can't thank you enough for coming on the program and giving us this very in-depth conversation on everything cobalt. We will definitely endeavor to get you back on the program, and we'll see how cobalt markets play out for the rest of the year and beyond.
Yeah, my pleasure, Colin. Anytime.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?